Today we have a very special guest, Ken Chow. Ken actually has a little bit of an honor that I have to share with you, though, before I let him get started. After we did Ken's first webinar, which I think was 2 or 3 months ago, I probably got more positive feedback than I have about any other presenter. So you guys are in for a real treat as long as we can hear him. And that being said, we'll go ahead and get started. I noticed Jose doesn't have sound, so I'm going to give him a little bit of advice in terms of that by typing. But Ken, are you still here?
Yes. Can you hear me, everybody? Can everybody hear me? Great. Welcome, everybody. Here's some feedback. Let me turn down my speakers. Great. Welcome, everybody. My name is Ken W. Chow, and I'm a professional trader. And let me know if I'm too loud or too soft. I'm trying to hold my microphone in the right position. Hello, everybody. I've been trading on and off for about almost 20 years. Graduated from UCLA with a degree in engineering. And what I would be, I'm going to be sharing with you are some of my trading techniques that are simple, but yet it makes logical sense, and you can see how you can improve your own trading with this. And I'll show you my some of the more powerful tools that I've been using. Okay, now I call my trading methodology superstructure trading, and you'll see why in a second. The market has no structure, as you know. We need to give it some sort of structure, and when you put enough structures and supporting structures, you will come to what I call a superstructure, and that's when you have a lot of good patterns helping you out. Okay, now let's talk a little bit about what today's presentation is. We will start with the presentation, and I will read the questions and I'll answer those questions during after my presentation. But today's presentation is, we're going to talk a little bit about superstructure trading. We want to talk about what it is and the exclusive approach for real success. Now, the exclusive approach, you'll see lots of examples, chart examples, using some of the good charts here with MetaStock, and you'll see what I mean after we're done. Now, let's talk about the three main approaches to trading. The first approach, of course, is the fundamental analysis. You know what that is. You listen to CNBC, you hear unemployment reports going up, and real estate prices are going down. Therefore, let me short the stock market. Well, that's fundamental analysis. Not very good with timing. Not very much of precision. Now, if you're a long-term trader like not George Soros. George Soros also talks about macro by Warren Buffett. Warren Buffett buys some things for years, and that would work if you look at it from a very macro perspective, but not very good for short-term trading. Next, we have technical analysis. That's when you use moving averages, indicators, oscillators, MACDs. Those are okay. I find they are lagging. So they're not very, very useful from that perspective. Okay, and there's a third way of trading, and that is chart reading. Now, we're going to be talking about chart reading today. Traders of 100 years ago, they read charts. They did not have a lot of fancy indicators helping them out. It's basically price action and chart reading. Now, that's the truth. Price is truth. It's not something derived from price like indicators. So we're going to talk a lot about chart reading, and that's what superstructure trading is based on. Okay, now let's talk about the superstructure trading exactly. What is that? We want to look at two main things when we are reading a price chart. Okay, and as you'll see, we're reading a simple price chart. We're not talking about candlestick charts or line charts or tick charts, nothing fancy. Your basic price chart is what we use. We want to determine the trend direction. Is it going up or is it going down? Now the next thing is very important. We want to evaluate the strength of the trend. Is that trend a strong trend or a weak trend? I'm going to share with you a couple of tools that you can use just right after this hour is over, where you can evaluate trend strength very, very easily. Again, these are simple chart patterns. They will get more involved if you want to look for additional trading strategies, but we're going to show you some very simple ways to read trend strength. Okay. Now, what is this exclusive approach that we have here? We're combining price analysis with time elements. Okay. Now, what are the price analysis? We're looking at the dominant structure, which is the measured move. You have all seen the measured move. It's a very basic concept. We'll talk about that. We will also combine supporting structures with the measured move. Now, we probably won't have time to talk about extreme Fibonacci ratios. Another powerful tool that I use is the Fibonacci ratios, and the way we're using it differently here in superstructure trading is we are looking at what's called extreme Fibonacci ratios, which is different than regular Fibonacci ratios, because not all Fibonacci ratios are created equal. For those of you who are familiar with Fibonacci ratios, some are more important than others. Okay. Another important thing that you want are some sort of time element, something to do with time. Okay. From the alignment of price and time, we will have a good idea as to how strong the trend is. Okay. Now again, we want to look for some tools. We have two simple tools that we have here. One is called the skewing, and the other one is called the time range. Again, we won't have time for time range. I'll just go to skewing. I'll share that with you today. Again, we want to make sure we have something to answer the question: is the trend accelerating or decelerating? Okay, that's the most important thing. So a superstructure trade sets up when there's price and time alignment. What that means again is, from the basis of price and time, you want to have something, again, something simple. I know you guys have heard about WD GAN and all those things. They're very complicated. You want something simple, especially when you're day trading or doing shorter term trading, where you can, put your arms around very, very quickly. So what you do is you have an edge. With superstructure trading, what is your edge? You can actually pinpoint highs and lows in advance. Okay? Now, picking highs and lows are deemed a little dangerous, but the way we use price action and determine how a trend is decelerating into a high or a low, along with using extreme Fibonacci extensions, we can pinpoint highs and lows in advance. In fact, just last Tuesday, I talked about a potential low in the E-mini S&P between 901 and 902, and that one went up for like 15, 20 points the next couple of days. But for a day trade, I have a lot of students who made about 10, 12 points on that move, because we use extreme Fibonacci extensions. Now, for those of you who like